Hi, Tom.
Hi, Virginia.
So I'm going to get your thoughts on this. I'm going to read from an article from Better Dwelling Canada. It says Canada mortgages, their delinquencies are beginning to climb and a lot more are brewing. So basically it says Canada's mortgage delinquency rate is the share of total mortgagees past due by at least 90 days in Canada. So that's a big deal. After 90 days, this is the point at which a lender can take action if the borrower doesn't pursue a remedy like reinstating, basically paying the past due or paying it off in full. So looks like more and more people are becoming delinquent in their mortgages. What say you?
Yeah, well, and I heard another stat yesterday that's subsequent to that, the number past 60 days is quite high. That's they kind of call pre-foreclosure. So like, of course, when you miss one payment, they put you on a watch list, and I guess they have different names for the number of months that you're behind. So pre-foreclosure at 60 days. I don't remember the number. I wish I did now that we're in the context of talking about it, but it was quite high. So you got a lot at 90, a lot coming behind them at 60, and I'm sure there's a lot more that are at 30 days. Even again, I'd love to see all those numbers lined up and see what we're dealing with, because I'm sure they're pretty high.
Yeah, and how do you climb out of that? I mean, how do you climb out of that, really? That's
Well,
tough.
I go back to 08 when we talk about Canada housing, because if you look at 08, if you look at charts, I'll just read out the numbers. So Canada housing went down about 7 or 8% in 08. US went down 30. So they cleared out a lot of debt, and they're complaining now because there's more people talking in the US about money. There's more people that are educated about it there and seem to, be vocal about it. And what they're saying is about the US is like as if the world is coming to an end. So how bad is Canada?
I know.
We didn't clear out that debt. We kind of just dipped a bit and then just kept going. And when you look at the numbers, you compare US, median home price to Canadian median home price, and it's just way different. So I mean, Canada is as bad as the US is. If you're listening to people in US talk about their housing, imagine how bad Canada is.
And they certainly are more vocal about it down there.
Yeah. Americans are just having more of a revolutionary attitude. So when things start to go wrong, they speak. They speak up. Canadians are too passive, in my opinion. We lay down for everything. Think somebody's going to fix it for us, I guess.
Yeah, those are the promises that we get sometimes. And we've surpassed Australia now. We're the biggest bubble in the world.
Yep.
Real estate.
Yeah, I saw that. And Australia is horrendous too. I mean, the prices simply have to come down. I mean, I know that kind of smacks people in the ear when they hear that. Well, how dare you say the price of my house has to come down? But I mean, the majority of people are not selling their houses at any given time, right? So what does it matter to you what the price of your home is if you're not selling it, first of all? And if there's one thing that I aim to do before I die, that is to convince people that this dollar, this way of measuring by using dollars is not a standard. I've gone over this in a number of videos. If you want to look at a video where I talk about housing, I just recently did one where I said, you think your house is an investment, A. So if you want to see my opinion on that, I won't go over it here. Go watch that video. I'll link it in the description. And I just go over the way the numbers are an illusion. We get so attached to the number that represents our house, the number of dollars, that we completely lose our minds about what a house is supposed to be. And I'll leave it at that. Go check it out.
So Equifax data reveals the mortgage delinquency rate climbed in the first quarter 2023. Households are also increasingly falling behind on payments, a sign that further mortgage delinquencies are in the pipeline. This is occurring as lenders scramble to extend the length of repayments for over-leveraged borrowers, hoping to avoid defaults and the downward pressure or prices it can create.
Yeah, there's the red flag statement. Try to avoid the prices coming down. So we're going to intervene in the free market
Yeah.
and try not to make houses more affordable for people.
Yeah.
Is that what you're saying? You know, I
Uh,
mean, yeah, I mean, you get people complaining, my kids can't afford a house. And then out of the other side of their mouth, when they're playing cards with their friends, they're bragging about what their house is worth.
right.
Well, you can't have it both ways. So to pick a team.
Yeah.
Pause.
Oh, no wonder. Look at this. Okay, so also it says here, Canada's big six banks have extended amortizations beyond 30 years for nearly 1 in 4 mortgages in Canada. That's wow. The extended length helps over-leveraged borrowers with smaller payments over a long period, with the regulator believing it can prevent delinquencies and prevent downward pressure on home prices. Yeah.
Which is literally putting people into a situation where at the end of their mortgage, they will owe the same amount or more than they owe at the beginning. Like they're just not paying it off because the interest portion is profit to the bank. It doesn't go against your, that's the principal portion. So if you're not paying your principal, what is their theory that everything's going to get better in a couple of years and we can all go back and sing kumbaya around the campfire?
Right. And didn't you mention at some point that this is happening in Europe or has happened in Europe?
Yeah, I'm not up on the details, but Europe has gone through a similar crisis over and over again of affordability over the years. And they're into like really, really long mortgages, apparently in certain countries in Europe are like generational. You take over the family mortgage when you buy the house, I guess.
Wow. So
You
that's
know,
how your kids can eventually have a house.
yeah,
Oh my gosh. It's so bad though, eh? 1 in 4 mortgages. Like,
1 in 4. And that's right now. We're not even officially talking crisis, at least not in Canada yet. Nobody wants to be the first to
right.
admit there's a crisis because, then well, then it becomes self-fulfilling, right? As soon as they start talking about it on the news, then everybody talks about it. Right now, it's a small group of people like us that are having this conversation, and the rest of the world is just business as usual, right?
Yes. So it says here, it's easy to have a low delinquency rate if you never have to pay off your mortgage. So, these are the stats being, you know, um, what would you say, manipulated, saying, oh, it's a low delinquency rate still. We still have a low delinquency rate. Meanwhile, you're pushing these mortgages into 40 years and stuff, right? So of course it's easy to have a low delinquency rate if you never have to pay off your mortgage.
Yeah, well, it's never wanting to solve the problem at hand. If we did, I always say kill the monster while it's small. It's going to be a whole lot easier.
Yeah.
We don't want to solve the problem. We didn't solve it in 08. We didn't solve it in 2000, right?
Yeah.
We didn't solve it in the 80s and we didn't solve it in the 70s because we just don't want to deal with the pain of clearing out all the debt so this thing can make sense anymore again, and so we just keep kicking the can down the road. Soon we're going to kick the can and break our toe. And if we'd have just, I like back in 08 when I watched that go on, I just shook my head and went, they are just going to paper this over and just keep on skating. And they did exactly that. Cover the holes and keep moving, and we're dealing with it again. And are they going to deal with it this time, or are they going to let the market solve it? No, of course not. They're right back in there trying to prevent, a housing collapse. It's inevitable eventually. It's the matter of they just keep moving the the eventuality of it down the road. So it's going to hurt more. The cliff just gets taller.
Yeah.
The fiscal cliff, they say, right?
Yeah. It says here, though that makes the number of defaulting even more disturbing, if lenders are pulling out all stops to prevent defaults and the rate is still climbing, structural problems are likely brewing. That's how a small failure turns into a big one that no one saw coming.
Well, Bank of Canada just did another 25 basis points, and it's rumored they're going to do another 3 hikes this year. And if the 25 basis points doesn't impact too hard, they'll probably do 50 next time. Who knows what they'll do, so it's going to keep going. Anybody who believes the inflation rate is 6 or 7% or 8%, whatever they're saying. I mean, do your own calculations, use a little common sense, and you'll see that that can't be right. They don't include
Mhm.
rent and housing and any of the things that make sense to the proper proportion in that calculation, right? So it's impossible to believe those numbers. I mean, just the fuel cost alone, you take any business that's fuel intense or anybody who does a lot of driving, do your inflation rate just
Yeah.
on that as
Yeah.
a portion of your economic house, right?
Right.
No way it can be that rate. So they eventually they have to get above the real inflation rate for it to change. And problem is if they do that now, it will literally wipe out the economy in Canada and North America if they do it. So they got to do it gradually. But again, they'd have been better to do it 20 years ago or 30 years ago or 40 years ago. But we just
Yeah.
keep piling it on.
Yeah. Says here, since private lenders specialize in finding a loan for riskier borrowers, it likely also again skews the stats, because it says 1 in 10 high risk mortgagees are borrowing from private lenders. So again, the stats are skewed. That's a
Yeah.
lot. That's a lot of high interest mortgages for non-traditional qualified borrowers before rates even began climbing.
And
That's
apparently
before.
yeah, right. And apparently we don't have accurate statistics on private lending. So we can't really know how much. Well, we know how much of the market is that market, but we don't really know what's going on over there. We only know
Yeah.
the public stuff.
Well, it looks like 10% anyway.
Yeah. So add another 10% of mess to the pile, I guess.
Yeah, I imagine it might be a little more than that too. But so you were saying once about if we brought the price of housing down, but we brought the price of your income down and all that. There was an analogy there. Did you want to try and
Oh,
explain that? It was
yeah.
good.
Well, it's what we really need to do is it's all about proportion, right? Like how much of your dollars are going to your home, what percentage. And there's a natural limit that has been discovered. About 30% or 35% is what you can afford. And
Yeah.
that's where people are being challenged. That threshold's getting higher and higher. People are spending 50%. Once you're up to 50% of your cost is your home, you're in trouble. I mean, nobody does well when that's their situation. But what was he asked me again? I got onto a tangent
Oh,
there. I
well,
was
you talked
building up
about
to it.
if you brought
Oh, I
the
remember. Yeah. So it's proportionate to wages, right? I mean, you just look at a chart where the wages versus home cost, and you can see it's just a constant battle that wages are falling against the price of a home. And it shouldn't be that way. I mean, wages should keep pace, but we don't give people raises as fast as we create money. It's much easier to create a ton of money, currency, and pump it into the system and have all the assets pick up that extra capital. It doesn't improve the value of a home because everybody else's home went up the same amount. So what are you gaining? I mean, the purpose of having dollars in a home is so you can extract those dollars and move and buy another home that's similar. That number is irrelevant. They just keep moving in parallel. So people get excited about their homes gaining, but everybody else's home is relatively gaining similarly. I mean, yeah, granted, if you live in a bubble city, you're going to, you could bubble up in Toronto and then move out into the Kawarthas and maybe pick up some dollars, but who really does that?
Yeah, who really
So
does that? What's the percentage?
yeah, it's probably very, very small. So this
Downside.
insane tail chasing game just puts housing prices at a complete premium, way out of whack with their proportion to wages. So the only solution to this, if you don't want your house price to come down, is you're going to have to accept wages going up, everybody's. So how does that give you an advantage? What's the advantage there? What's the payoff? Just because you have a bigger number or more zeros, you fall into this illusion you have more of something. All you do
Yeah.
is have more of an arbitrary measurement.
Mm-hmm.
It's
Yeah.
a delusion that people don't understand. And if there's one thing I would try to get across to people is this delusion of measuring with dollars. They're not a standard. They're an
Yeah.
elastic standard. They measure differently every time. I know that sounds crazy, but you're going to come to that conclusion eventually if you look at it hard enough. There's no other conclusion to come to. The dollar is not a standard. An ounce is a standard. A kilogram is a standard. A dollar is not. It's
Yeah, changes all the time.
It's like measuring worth in hugs and kisses. You know, a dollar. It's that silly when you really get down to it. Show me a dollar. I don't show me a loonie. Don't show me what is a dollar. And you start
100
asking that question. 100 cents, right? What's a cent? 100th of a dollar. Circular logic. That's not an answer. If that's an answer to you, you need to go back to school. That's not an answer. It's circular logic, and circular logic is not an answer. It's maddening. I mean, if I could spend the rest of my life just talking to people about that one thing, and I'd be happy if I could get through to a few people.
Yeah.
You know.
Yeah.
But one day, maybe. One day.
Well, they're saying now it's not a panic-inducing change, but a sign that normalization we've been hearing about might arrive soon. So normalization, there's your 45-year mortgage, that generational maybe like Europe, and that's going to be normal, the new normal. And really, it's, you own nothing and you'll be happy, I guess.
Yeah. And that's the problem is when everybody's doing something. Human beings tend to operate by, to some degree, looking around and, well, what's the mode of behavior? Maybe I should try to fit into that, because we want to be liked and we want to be part of the social sphere. So we don't want to act like different than other people. So if everybody's, mortgaged out of their mind and not paying their mortgage down, well, let's have a barbecue and drink some beer. Why not, right?
Yeah.
As long as I got the house, I just don't have to think about it. I couldn't live knowing I was living in that situation, but apparently people are okay with it. Anything to keep the house, right?
I guess so.
Anything you want that bad can be used against you, can be used as a lever to get you to do things you otherwise wouldn't. Just remember that. And they're going to use people's properties as a massive lever to keep them dancing to their tune, because now that they're, been done a favor, well, now you owe somebody. You don't just owe the original owing, you owe another favor on top of that. What's next? Because these people aren't out of the woods yet. They're not. Just because some of them have been given a reprieve, that's a hard word to say, reprieve for a bit, it doesn't mean they're not going to fall right back into the same, fire very soon.
Well, I mean, unemployment's a concern. So if you're going to have a 45-year mortgage and now one of you loses your job, I mean, how are you still going to be able to keep that home?
No, not likely. I mean, what's next? We just
concern now.
Yeah, what's next? We just going to nationalize residential housing? Yeah, you can stay. We're just taking over the house, and now you got to do what we tell you to do. Your grass has to be this long, and
yeah. Well, hey, in the U.S., hey, Home Depot's going to make some little apartments in there.
Yeah, 1,000 apartments in a Home Depot. Where are they going to park all of them? Oh, well, we're not going to have cars, are we?
Right. It could be coming to a country near you soon. So tell me about the Paul Hillier story about fixing the money.
Oh, yeah. Paul Hillier. I was watching him speak at a library in Toronto. And I mean, this guy was one of our politicians under Pierre Elliott Trudeau. I think he was the defense minister. He's written a number of books. Really good book I read by him called Goodbye Canada. I think everybody should read, just about the financial system. And he basically said at this talk one thing that really hit me. The guy asked him a question. He said, Paul, I hear you talk about the banking system and money and the finances and the lack of understanding and all that people, and that's all great and everything, but there's so many other social problems, Paul. How come I never hear you address those? And he says, well, that's a very good question, and I think I have a good answer. And he says, because I believe that those other social problems are a byproduct of the money. Fix the money and those problems will go away on their own. I gave him a standing ovation, went up and shook his hand after and had a short conversation with him, congratulating him on his standing on that, because I just thought that made so much sense. Now, I'm not saying every problem in society can be solved by fixing the money, but I'd like to see how many of them would go away as a result.
Yes.
He certainly believed they would, and I do too.
Yeah.
Lack of resources, you call it money, whatever, it's just a resource. Lack of resources is frustrating. It causes frustration with people, and eventually they lash out. They feel a sense of depravity, and they're going to lash out. Look at what's happening in Europe right now. Look at France. They're burning stuff down over a change in, access to resource, and that resource is an earlier retirement. They're
Yeah.
just losing their minds over it.
Mm-hmm.
So, yeah, I thought Paul was, I think he's still alive too. How old is that guy now? He's got to be 100. I think he was 92 when I saw him speaking. This was quite a while ago. So,
Oh, well, I don't know then. I
yeah,
have to check.
if he's still around, maybe he's gone. I don't know. But
Yeah.
yeah,
That's a great answer. I love that answer.
yeah.
Yeah.
Well, I think we can end on the Paul Hellyer note. What do you think?
Yeah. Fix the money.
Fix the money. Fix the money. That's going to be our new meme. Everybody talking about solutions and stuff. We'll just in the corner be going, fix the money.
Fix the money. Yeah.
I think we'll make that one stick. Fix the money.